Good morning everybody, and this is your S&P 500 day trade setups for today. So yesterday was pretty much a nothing day. We did have a trade in as per Telegram, but as you can imagine that was stopped out for break even. So at the moment, if you look at the 8 hour, you can see two range bars, and we're busy with more than likely another range bar as far as I'm concerned. So we did break through a flag, and I'll get to that now in the lower time frames, which did trigger a buy for me, but ultimately I just want to get this diagonal in here because it's also important to see, and you can see how parallel diagonals are pretty important at the moment. So bottom line is we are consolidating. There is no two ways about it. We had a big down, we had a big up, and now we are busy going sideways in between two levels. This one here is probably not the correct level to use. We probably should put it up a little bit, but let's take it up to this inside bar here. That pretty much gives us the right level. So the buyers are coming in off 38.69, and the sellers are coming in off 3900, and we are sitting at 38.85, so right between, it's almost in the middle of that range. So if we start drilling down through the time frames, let's just get rid of that block there. So first things, I did say to you yesterday we wanted to see what happened here. I saw what was happening there. It did look like a bit of a flag breakout, and we decided to take the trade long. But again, it's come back pretty much, and kind of back to defend the 38.69 area. Oscillators are nowhere at the moment. 3 hour, the 3 hour moving averages as well are flat, and we haven't really got a crossover. If we drill down to the 1 hour, okay, you will see there's our flag on the 1 hour. There it is there. Okay, so we had a strong rally up into a flag. Nice break and retest. That was my entry right there, right on the 155 EMA as well. We did start get going, move my stop up. My entry was pretty much in this area here, and yeah, going into close, sold off, triggered the stop. I'm pretty sure there was quite a few of us that were waiting for that because it's a fairly decent measured move. Now what we do have at the moment is some kind of a megaphone, which is still a consolidation pattern, so this is still something we need to pay attention to. So at the moment, that's kind of structure that I'd be looking at there. Let's just extend it to that and bring that in like such. Okay, so let's get rid of that one. That is the structure we need to pay attention to right now. We have rallied. We've come into some form of consolidation here. We could be forming a bit of a channel. Now, the latest on the stimulus package at the moment is it's in the Senate, and of course now the politicians want to add all their little pet projects to it. So I think the general public can maybe expect something by next week. So the existing economic relief or financial relief expires on the 14th of March. So the politicians are going to drag us out all the way till then, trying to make a name for themselves. Right now it's got nothing to do with about the man in the street, but everything to do about the politician and its ego. So you're going to see this sort of confusion I would expect for the rest of the week. So yeah, what you need to be doing is watch on the lower time frames. Now, the 15-minute, I mean, there was the signal for the 15-minute buy. You could see off the 15-minute 155 EMA as well. Moving averages were in the correct direction, but and oscillators moved the bottom. But as you can see, above and below the moving averages, big confusion yesterday, and there's nothing that is telling me that that is going to change today. So I'm actually expecting us to drift lower. So this big gap down here, this opening gap for the week, don't be too surprised if you see that get hit this week. Now that's pretty much what it looks like for me. So we are in a channel at the moment, so yeah, I'm kind of tempted to be looking for opportunities to sell out of this, but I think the opportunity is going to come at a break of 38.69 or 38.70. If I look at the hour, yeah, we do have a bullish crossover here, so the trend is up at the moment, so I don't think I'd want to be selling just yet, but you can see a clear break below this 38.69 or 38.70. That's definitely going to indicate that we'll have a moving average crossover. We'll break out of this channel and move the downside, but at the moment that is a bullish flag that is setting up. So it's in a trend, it's a bear flag and a bull trend, which is a bull flag, if that makes sense. In other words, that is consolidation for another move up. So that's the kind of the direction we should be trading until we break below 38.70. Okay, so for me today, it's probably down to a much lower time frame. The 15 is probably not even an option right now. So you'd probably find yourself moving down to the 5 minutes at the moment. So you can see structure here, double bottom, rally, pretty much got the target, the double bottom, came back to test the break. Is a bit of a gap down here as well. And now we're breaking through the moving averages. So there should be some opportunity brewing shortly, but if there is any long on offer, you've got a gap up at the top here as well. So there is a bit of a magnet to the upside. So wouldn't surprise me to see us get back to 3,900, test it, and bounce off 3,900. I don't think I would sell off 3,900. I want some more structure before doing that. And selling off 3,900 is pretty much, it's in a bull trend, and it's not something that I really want to do at the moment, unless we get some 15-minute signals that tell us it's time to sell, which never really came into play yesterday until this hanging man here and then the close. Okay, anyway, lots of waffle coming out of me this morning. It's confusion, and I think that's the way you must treat it. So if you are going to trade the ranges, I would pretty much only be looking at the moment to trade in the direction of a range break based on the moving averages. So what I mean by that is come down to something like a 15-minute. Right now, moving averages are bearish, except for the fact that we are above the 155. So break down below, come back, test the 155, and we stay bearish. That would be a short signal with a stop as close as possible. And you're going to be looking to take profit pretty much down here. Converse is true. If you get above the moving averages, you get a crossover, and we're above the 155, trade in that direction. So in other words, use a 15-minute, trade off the 155, because that's kind of going to be your signal. And you can see it will work out, even if it's for short scalps or long scalps. Doesn't really matter which way you look at it. But that is the advice that I'd have for you this morning. Pay attention to the oscillators on something like the 15 or 10 or even 5 minutes. You know, the 5 minutes, if you watched yesterday, it didn't really give you much when the market opened, but during the European session, once Europe opened, you can see we had the crossover and then the seller stepped in. You can see pretty clearly when you're getting some price actions, which indicates you need to start looking at the opposite direction, that pin bar. And then you can see, even if you ignored that and just traded this consolidation on top of the 155, take the break of that with a stop below it, there's your trade. Okay, but again, I can't give you those signals from a long-term perspective. Doesn't make sense. So for me, general advice, if you're on the 1 hour, we are sideways, stay out of it until we break this trend line to the upside, or alternatively, if we break this horizontal to the downside, then it is short for gap close. Otherwise, it is long on a break of this diagonal up here. Okay, here we go. That's it for me. Hope it helps, and we'll catch up with you later. Cheers for now.